portfolio over and over and over again. Because I'm not doing this from hype. I'm doing this from facts, figures, numbers, logic, looking at historical patterns. Where have we been in history? And what has happened over and over again? In history, we've had over 30 major market collapses in 200 years. The markets always cycle, number one. The markets are just your emotion, number two. The markets move from the undisciplined to the disciplined. So when I started to look at the economic cycles and how humanity operates within cycles, how nature operates, and how everything operates to include us, nature, relationships, business, and markets, I started to really mature and understand that I need to be very, very careful, very, very strategic, and I need to really know what I'm investing in. So XRP to me, well, it's my number one holding by a long shot. Let me give you the exact percentages. So XRP is 43% of my crypto portfolio and Bitcoin is 40%. Number three is W, L as in Larry, F as in Frank, I as in India, WLFI, World Liberty Financial. That would be my most speculative investment. Why would it be in my top three? I'm just using logic. Okay. DeFi is here to stay. World Liberty Financial is a worldwide bank. The central bank is getting completely dismantled. We're coming into decentralization. On February 20th, 2026, there's a 36-year cycle that is ending, and the new era is coming in from financialization back to production, from centralization to decentralization, from trusting a system to trustless systems. So knowing that, and everything is just a cycle, biblically, spiritually, financially, physically, then I can see that we're going into a new system. So I've picked XRP as my number one holding. Bitcoin is my number two. WFI, that would be my most speculative, because the way I usually do things is Warren Buffett style. It's hard to measure because it's new. It's speculating into the future. Solana is number four, and that's not speculative. So XRP, Bitcoin, and Solana in my top four, those three I know are going to be here after all the dust settles. So as we go in today's video, I'm going to show you a couple videos, one from Michael Saylor, one from the CEO of, I think it's a CFO or CEO of MicroStrategy. And then we're also going to look at what XRP is doing. We're going to just put some logic behind this, okay? Now, I'm not telling you what to invest in. I'm only going to share with you my journey along the way. You should always do your own research. And my point behind this is we are super, super calm during these red markets because we buy the fear, we sell the greed, and we build defense. And I'll explain that on the back end. All right, so let's dive right in. Let's see here. What do we got going on? All right, so the first video we're going to watch right here was on, is this Fox News? So Fox News, this is the CEO, I think it's the CEO of MicroStrategy, okay? So I want you guys to hear from their perspective on what's going on. Now, if you watch the Strategy B, so I have some dividend stocks that are synthetic option calls that are attached to MicroStrategy, so I pay attention. Bitcoin is 43% of my portfolio, so I pay attention. I'm also going to show you STR. So I have dyslexia, so I'll show you physically, so make sure I'm right. STRC. And I'm going to show you why banks are panicking right now. Sorry, my phone. I'll shut that off in just a second. I'll show you why banks are panicking right now, and I'm going to show you an actual dividend stock that I'm going to be accumulating starting next week.
You know, that isn't exactly outperforming Bitcoin. I mean, Bitcoin was 126,000. It's now 78,000. So I'm just wondering, what would have to happen for you to stop accumulating? I mean, you still continue to have enough cash to accumulate all of this Bitcoin each and every time that there appears to be a slight dip.
Yeah, so many have said, first of all, you have to have a long time horizon. With Bitcoin, with strategy, with performance, you get volatility. So we go back to when we first started with Bitcoin, which was August 10th, 2020. All right, looking back.
This is important. Listen to, so this, and I want to share this because I want to share from a personal perspective how I make my decisions. For example, we run 6 companies, and I'm in business with my partner, May, and my CFO, Jeremy. And when we do business with people, when we sit down, a lot of people approach us for business. And if we hear anything that is short term, we're out. It has to be a 5-year to 10-year horizon. Okay. So when someone comes to me and like, oh, Trump has this, no. Like WFI, it's long term for me. Solana, long term. XRP, long term. Bitcoin, long term. Businesses, long term. But we have short-term exit plans if things go parabolic.
Back 1 year isn't enough time. Let's say you go back 5.5 years. Strategy has had 55% ARR during that period of time. Bitcoin has had 38% ARR. Interestingly, gold has had 18% and the S&P 500 15%. The most interesting story there is strategy outperformed Bitcoin and Bitcoin outperformed gold. And gold, of all the assets out there recently, has done tremendously, has outperformed the S&P 500. So you believe in that long term, right? And I get the short term can be volatile, right? Like 1 year is a very short time horizon.
And that volatility is your gift.
You believe in that long term, we keep buying Bitcoin.
You sound, I'm sure he would cringe at the comparison, but you sound a little bit like Warren Buffett, who says, look, I
love her comparison. I love Warren Buffett.
want investors in my stock who understand that we are very long term, and anybody who panics and flips out of their mind when we have a year or two that underperform the S&P, don't buy the stock. Is it sort of like that? And to that end, what are you hearing from investors who say, wait a minute, in your most recent quarter, granted it was on paper, but you lost $12.4 billion. What do investors say? You've got to have some who are calling up and saying, what is going on?
Not really. Well, let's start with anybody can buy our stock, right? We're one of the top 20 most liquid stocks in the NASDAQ, right? And there's a reason for that liquidity is people believe that Bitcoin is volatile, MSTR is volatile. So some believe in Bitcoin long-term. Some are trading on the volatility in the short term. I have no problem with that, right? Now, what about our short-term paper losses? They're paper losses, right? It's not a cash loss, right? It's not even a Bitcoin loss. It's not like we have less Bitcoin. And again, you have to look at Bitcoin per share. Are we accreting Bitcoin per share? That's the most important KPI that we run with. That's how we make our short-term decisions. And
okay, so that's so important. Okay, they haven't lost the Bitcoin. It's a long-term perspective. And if you are short-term, so less than that, you're short-term and you are stuck in the short-term perspective, you're going to get wrecked in investing.
It's going to be 2 to 4 times as volatile as traditional capital like gold or equity or real estate. It's got 2 to 4 times the performance this decade of traditional capital. It's the most useful global capital asset in the world. You can put more leverage on it. You can trade it in more ways than any other kind of capital asset. So the volatility is the bug, but the volatility is the feature. And we believe that digital capital, because it's so much more performance, is the basis for an entirely new set of financial instruments that we call digital credit.
Is there any argument to be made, though, and given that that Bitcoin has sort of done a round trip since the beginning of this administration, that we are now finally getting to some kind of price discovery moment that's fundamentally different? That in the past, Bitcoin, because it wasn't in ETFs, because it wasn't as broad-based, that there wasn't the kind of price discovery that's now available today, and maybe these prices are more realistic than what had been the case before.
Well, there's no doubt the asset is seasoning, and that's a good thing. We just had an all-time high, Andrew, 4 months ago, October 6th, I believe. So if you've got a time horizon of less than 4 years, you're not really a capital investor, you're a trader, and the traders are having a field day with the volatility, good for them. But the capital investors are looking out 4 years, and if you look at a 4-year time frame, Bitcoin is 2 to 3x the performance of the alternative capital assets, and anything built on Bitcoin over a 4-year or more time frame is going to outperform for the same reason.
And that's going to continue to happen. Okay. Now I'm going to show you this. This is where banks are panicking. Okay. This is called, so Strategy has, let me see. Do I have it up on my screen here? Let me switch over here. So I'm going to show you guys this really quickly. Now, I'm not saying you need to get into this, right? I believe in Bitcoin. I believe in Strategy B. And that's why I share with you guys what I'm doing. You guys have to have conviction in this type of stuff. So this is MSTR, the stock. And then these are all dividend stocks right here. These are preferred stocks. He is challenging banks at the core. Check this out. Okay. So I'm actually going to start getting exposure to STRC. Now, what is the difference between this? Okay. So you have a cryptocurrency. There's your net asset value that can go up and down. Then I have my stocks. ABTC, XXI are my top 2 stocks. I have high risk, high return dividend stocks in the synthetic option calls. That I don't even talk about, because if you don't online, that's the only thing I don't talk about, because if you don't know how to de-risk like I'm doing, you're gonna get wrecked. That's like gambling. Okay, it's a very small percentage of my portfolio, but I'm de-risking into Bitcoin and XRP. That's what makes mine work. Doesn't matter about my NAV erosion, because I'm de-risking into Bitcoin and XRP. I've already beat the NAV erosion. Okay, now these STRC I feel comfortable talking about if, only if, you believe in Bitcoin. If you don't believe in Bitcoin and you think it's going to zero, and if you don't believe in strategy B, then you would not want to get into preferred stocks like this. But this is an example of how the financial system is being challenged at the core. And I'll explain the core components of this in just a moment.
The story here is that the digital credit, STRC, is the most popular credit instrument of the decade. It's trading 100 times as much as traditional preferred stocks, and it generates 2 to 4 times the cash flow of any other fixed income instrument. So that's the revolution taking place.
Okay, so what is he talking about? Okay, and then I'll explain this to you guys right here. Okay, so and I showed you this. Let's go here. Again, I will only tell you guys what I'm doing. So I don't own MSTR. Okay, I don't own any of these, but next week I'm going to be buying STRC. I'm going to be dollar cost averaging in every single week, as I do my other dividend stocks that I share within my community and my academy. Okay, so this is STRC. Okay, let me explain what STRC is. So the dividend yield is variable, anywhere from 9 to 11%. It's variable though. Okay, the dividend frequency is monthly. So let me explain to you guys. Let me bring you on my screen a little bit here. I don't know what's going on with my. No, it's not working. Yeah, my thing's all messed up. So 9 to 11%. Okay, so that's monthly. So let me explain this. So you have, like, for example, in crypto, you have the stock, which you can get the net asset value goes up and down. You win or lose, right? In a dividend stock, you have the net asset value. Okay, so say you put 100 grand in off of 10%. Do the math, right? You make $1,000 a month, right? So you have 2 components happening. You have your stock can go up and down, and then you have dividends paying every single month. Okay, so now you have the potential for NAV increase and NAV erosion, net asset value erosion, but you have the dividends coming in. Okay, so STRC, this is where they're challenging banks, guys. Think about this. If you had $100,000 in a bank, you get 0.025%, maybe 3%. You put this into a preferred stock, and you're getting 9 to 11% monthly dividends. Okay, the dividend type is generally cumulative. Okay, it is not convertible. So some of his dividend stocks you can convert into MSTR. Growth potential is low and moderate. Okay, so that means it's like it doesn't have a huge growth potential on the NAV side. Okay, so let me explain that. So you're not the growth potential. You're not doing it for NAV. This is pure cash flow. Okay, the price and NAV stability. How I keep bringing up NAV, that's net asset value. So like the dividend synthetic dividend option calls, which is I call them tier 1, super high risk, high return. There's a lot of NAV erosion. So my net asset value is eroding, but I'm extracting a ton of cash flow out. Okay, and I mitigate that by going into Bitcoin and XRP. Okay, so the price stability in NAV is very high. So it has high price stability. Okay, volatility is very low, and income reliability is high. Okay, so this is very attractive to me. Okay, very attractive to me, being a business owner as well. So I own 6 companies. I got into 6 companies because I thought that was the only way to create cash flow. And then I started to mature and understand. Then I got into high yield dividend stocks and, or dividend stocks in general. Most of mine are in high yield, high risk options, dividends. Now I'm starting to mature into tier 2, which is things like this. Okay, so STRC, let's walk through it again. That gets you about 9 to 11% return on your money. Okay, but you got to believe in Bitcoin, because if you think Bitcoin's going to zero, or you're scared about Bitcoin collapsing, then you would be scared that MicroStrategy B would collapse. The other thing too is that he has talked about they saved 24 months or 2 years of cash to pay these dividends out. So we got about 2 years of almost I wouldn't use the word guarantee, but dividends that they put aside to pay these dividends. And then as we're going into the bear market, if they can survive this bear market, man, these things are going to be freaking phenomenal. Okay. So I just want to explain that. So that's the example around my excitement around Bitcoin. Here's another excitement around Bitcoin. Then I'll go into XRP. You got Strategy. MSTR is the #1 Bitcoin treasury company in the world. Okay. Then you got XXI. This is my stock investment right here. You see the number 3. XXI, that's I hold, that's my number 2 stock, which is a Bitcoin company. You see Trump Media has climbed into number 12. And then we soon will see American Bitcoin climbing up in the top 15 very, very soon. Okay. So XRP, we got some great news yesterday. Latest Goldman Sachs crypto holdings disclosed in filing, 1.1 billion BTC. I thought BTC was going to 0. That's interesting. Yeah, Goldman Sachs holds 1.1 billion Bitcoin, 1 billion ETH, 153 million XRP, and 108 million Solana. Yeah, I think I made some good decisions on my BTC, XRP, and Solana. I think we're doing all right, folks. I think we're doing all right. I don't know, Goldman Sachs, you know, maybe my research team is better than Goldman Sachs. I don't know. I think we're doing pretty good. Anyways, just in, Ripple outlines institutional DeFi blueprint, XRPL, with compliance-focused infrastructure, positioning XRP as a settlement and bridge asset. And lastly, Ripple expands its institutional custody platform via integration. I can't pronounce that word. Letting banks and custodians offer staking on Ethereum and Solana without their own infrastructure. Woo, baby. All right, let's take a look at the markets here, guys. This is Merlin, smartest way to track your crypto. If you have not downloaded Merlin, I am one of the co-founders and creators of Merlin, smartest way to track your crypto. We keep your crypto safe in regards to we don't store or have access to your crypto. It's an interface. Let me just show you guys real quick. So this is an interface. You can see all your exchanges in one place. You know how I say this is a demo account, by the way. So this account right here, see how it says the mix here? If you go here, boom, boom, my mix is actually backwards. Mine's 43% XRP and 40% BTC. This one's flip-flop. So on the demo account here, see how you can see your percentages. You can see all your cryptos from your exchanges in one place. You can see all the different breakdowns of your exchanges. And then, guys, and in 2 weeks, we have a new tool that's being beta tested right now by some of our amazing team members. You go here and you can set up an exit plan. But within 2 weeks, you will have a little knob right here where you can actually do Fibonacci without needing to know how to do Fibonacci. You'll be able to grab the chart. The chart will look different too. You'll grab the all-time high from the last bull market and you'll drag it down, and a 3-year-old can do it. And it makes all your exit targets for you based on Fibonacci. So go down below the description of this video, download Merlin 30 days for free. You can try it before you buy it. You'll go to get started and you'll get everything set up here. And then we will help you out if you have any trouble. So we actually have real customer service. You can call our team on Twitter. You just click the, it's called Twitter X, sorry about that. Click the link in my bio and you can download it 30 days for free. All right, so let's dive in, guys. If you made it this far, comment warrior. Love you very, very much. All right, so here's my ecosystem. I'm going to be open and transparent with you guys. And just to be share with you guys is the only thing I don't share with you openly about is my dividend stocks in tier 1. Okay, so I love dividend stocks. You know, I'm generating great amount of money off. So what's the difference? So I have active income, okay, which is my businesses. I actively run my businesses. Okay, that's active income. But you'll work until you die if you don't make money while you sleep, Warren Buffett. So then I started to get into dividend stocks. And so we're in tier 1. Now I'm branching down into tier 2, which I just showed you an example. And I'm comfortable sharing you with that one because it's got NAV stability. It's got steady income coming in. We have a little bit of growth potential. So you wouldn't get into STRC for growth potential. You get into for pure cash flow extraction. For example, if I was to throw $100,000 on a property in Arizona here, a rental property, I'm getting into real estate, so I'm buying another piece of property right now. If I would throw $100,000 into a property right now, I couldn't even generate enough income to pay the rent. If I threw $100,000 in there, I'd generate $1,000 a month. No renters, nobody messing up the home, right? There's no tax liabilities. I'm only getting into real estate for tax liabilities, but that's my point. So it's a place to park some capital to make some cash flow. Okay, so your key is to turn your income into cash flow. That's the #1 thing you do. So I invented Capital DR. It is trademark pending right now. We are just waiting for our number. We trademarked it. I invented it. So it's based on microeconomics. It's not an investment. You can plug any investment in to beat inflation because you're getting fucked, man. To be honest with you guys, you're getting screwed. You're getting absolutely screwed. Okay. They pay you in debt. You put your debt in the bank. They lend your debt out. They tax you on your money. Okay, you send money to someone else, they flag you and they tax you. Then when you retire, you can't touch your 401k until you retire. Then they tax you. And by the time you retire, your value of your dollar has probably been cut in half if you worked for about 40 years through inflation, the silent taxation. So there you go. That's the game. So if you don't learn the game, like I did, you're going to get screwed every single time. I'm sorry, people that have 401ks, how many people retire rich with a 401k? Not very many, guys. So the only 10% of the population owns equities in the market. Okay, but we can change it, and here's how we do it. So cash flow. Okay, I just explained to you a cash flow strategy right there. You don't have to clean the toilets at MicroStrategy's building or Strategy B. You don't have to do anything. You just put your money in and it compounds. Okay, now what you do with the cash flow is key. So cash flow is king, not cash. So I have active income, and through my active income, I take 10%, I put it into dividend stocks. So I have active income and my dividend stocks. I keep my lifestyle very, very low percentage of my income. All outside of living expenses goes into assets. A, that's C is cash flow, A is assets. Okay, A is assets. So I shared with you guys my exact portfolio. Okay, I use assets that I believe are going to beat inflation. Mine have beat inflation. We lost 24% purchasing power since 2020. And I gained 200% on my Bitcoin. It's come down quite a bit after Trump got elected. I had 800% on my XRP. So I crushed inflation, but I'm not stupid. I took profits. I don't rubberneck. I took profits when it was up because it was going to come back down, and I put it into protection, defense, insurance, cash value life insurance. That's my family bank. Silver. I'm getting into copper, dollar cost averaging. That'll be kind of a trade though. Silver is going to be a long-term hold. Berkshire. Why Berkshire? Because I love Warren Buffett, and he's also beat the stock market as well. Instead of trying to go buy all the stocks he's buying, I'm just getting exposure through him, kind of like when you scale a company, hire for talent, right? So we got defense is insurance, and I'll explain insurance in just a minute. Silver, Berkshire, copper. So the reason why I do cash value life insurance so much that I bought my own brokerage, and I absolutely love, we actually built our own boutique brokerage on teaching people how to do it family bank wise, because we use them. All my agents use them. We use them through our capital DR strategy. We use them as leverage, L. Okay. So imagine this. I take income into cash flow. Well, it's 10% into cash flow. Income and cash flow go into assets. Assets appreciate as you rubberneck and you watch it go up and go down. I take profits and I insure it. Now I have a richest man in Babylon, a brother or sister. So now I have leverage from the insurance company. I borrow from the insurance company at 5%, and I go back into the markets when you're running from the market. So I buy your fear. Okay. Now I took $1, I put it into insurance policy. Now I have $2. I take the $2, I put it into the market. Goes up. Now I have $3. I pay that off, and then I do it again. That's how you leverage. The proper way. You don't leverage your digital assets. Don't listen to any influencer telling you to lock up your cryptocurrency and borrow against your cryptocurrency to live. Guys, it's way too volatile. We're not in price discovery yet. Once it gets to price discovery and there's some stability, maybe that makes sense. Okay, maybe borrow off your stocks, maybe that have some stability, right? That's 8 to 9% is catastrophic, right? But not a digital asset that can drop. I mean, XRP was what, $2.70, and now it's $1.30. And these brokers are going to get liquidated, guys. I mean, they're hanging on by a thread. I guarantee you. Anybody who's allowing people to leverage, they're hanging on by a thread right now. Okay, it's the ruthlessness of the markets. It always sounds good until it doesn't work. And a lot of these strategies are built in bull markets or in perception of predictions, right? So you got to be very careful. This is just how winning is done. So I would recommend managing your own money. I'd recommend taking sovereignty of your wealth. I'd recommend custodying your own assets. I'd recommend working with the proper attorney to set up a trust and an LLC and all those different things. So on top of all of that, I have a trust that owns a LLC. That LLC owns my real estate. It owns my digital assets. And then I extract from the personal side over to the trust and LLC side. And that's a pass-through account that protects me from any type of lawsuits and things like that, and protects my family for legacy. So that's how my ecosystem's set up. Like I said, the only thing I don't tell you guys exactly what I'm doing is the dividend, high yield dividend stocks, because if you don't know how to de-risk, it's like gambling. It's like going to the casino and throwing money in a slot machine or throwing money on the thing. I'm de-risking. Like if I went to play roulette, and I threw $1,000 down and I got 2,000, boom, I'm pulling money off the table. And then as I'm winning, I'm pulling chips off the table. That's exactly what I do when I'm buying Bitcoin and XRP. I'm stacking every single week with my dividend stocks. Now, tier 2, that's why I'm comfortable telling you about STRC. And I'm only telling you that because I'm going to start buying it next week. I'm actually probably going to get my first tranche on Friday, and I'm going to start buying it weekly. It has steady cash flow and income. So that's what I'm doing, guys. I hope that helps you. If you want to learn my capital DR strategy, down below, you can sign up to meet with my team to see if it's a good fit for you. Remember, we do not invest people's money. We are not brokers. We do not invest people's money. We educate people on how to navigate through the system. We're educators. We're financial literacy educators. So if you want to join my financial literacy education and work with our coaches, when we can teach you capital DR, it's down below. Love you guys. Warriors! Let's get your shit together. We're on my social media platform. Okay, link.